Well, listen. If you've paid attention long enough, one of the things you learn early in markets is this. What matters is not just the sensational headlines. It's what the headline tells you about the society we live in, the institutions we rely on, the systems that underpin everything else. And today, we have a moment worth watching, worth understanding, worth thinking through carefully. A congressional move toward impeachment of Donald J. Trump has been introduced in the House. Now, I'm not talking about rumors here. I'm talking about actual resolutions documented, filed, part of the official congressional record. Resolution H303. Introduced April 28, 2025. Resolution H4315. Introduced May 15, 2025. Both of them laying out charges of high crimes and misdemeanors. That's not speculation. That's official legislative action. You can look it up. You can read the text yourself. On the surface, this looks like another chapter in political theater, right? We've seen impeachment battles before. We've seen partisan fights. We've seen dramatic accusations and defenses that play out on cable news for weeks. So your first instinct might be to think, well, here we go again. Same story, different year. But from an investor's vantage point, and I've been watching markets and institutions for a very long time, this could be more than just politics. It could be about institutional stability, about how our systems handle stress and accountability, could be about financial transparency, about what we know and don't know about the financial dealings of powerful figures. And it could be about the balance between power and accountable leadership, about whether our checks and balances still function the way they're supposed to. Those aren't just political questions. They're questions that affect markets. They affect business confidence. They affect the stability that investors rely on to make long-term decisions. When you've been around markets as long as I have, and we're talking 6 decades now of watching how systems respond to shocks, you know what happens when an unexpected document release shows up. It doesn't always trigger a crash. That's not what I'm saying. Markets don't just collapse every time there's political turmoil or a leaked document. They're more resilient than that. But what it does trigger is a question, a fundamental question that investors start asking. Does the system still work the way we assumed it would? Are the rules still clear? Are they still being enforced? Can we still trust the institutional frameworks that allow markets to function? That uncertainty, that questioning, that's what creates volatility. That's what makes investors cautious. Over the past 72 hours, we've seen reporting of bank records. Now, let me be careful here. These leaks are still unverified in full. We don't know all the details, the amounts, the jurisdictions, the endpoints. A lot of that is still murky, but we've seen congressional language referencing financial transactions that are now under investigation. Language in these impeachment resolutions that specifically points to financial dealings as part of the basis for the charges. And when leaked financial documents land hand in hand glove with an impeachment drive, when the timing aligns like that, when the two things come together in the same news cycle, well, you step back and listen. You pay attention because that combination, financial irregularities plus political accountability mechanism, that's not just noise, that's signal. Now, what does this mean practically? Well, it means a few things, and I want to walk through them carefully because they're important. First, it means we're potentially looking at a situation where financial conduct becomes the center of a constitutional process. Impeachment isn't just about politics. At its core, it's about whether someone in a position of power violated their duties, broke laws, or engaged in conduct that makes them unfit for office. When those allegations involve financial transactions, potentially improper dealings, questions about money flows, concerns about conflicts of interest, the investigation gets very specific, very detailed, very documented. And documents, while they don't lie, they might be incomplete. They might be open to interpretation, but bank records are bank records. Financial transactions leave trails. Second, it means institutional mechanisms are being tested again. We've had impeachments before, of course, but each one tests the system in a different way. Each one shows us whether our checks and balances still function, whether Congress can hold powerful figures accountable, whether the process can work the way it's designed to work. And for investors, for anyone trying to understand the stability of the American system, that's crucial information. Third, and this is what really matters from a market perspective, it creates a new layer of uncertainty. Businesses don't like uncertainty. Investors don't like uncertainty, not because we're afraid of change, but because we can't price it properly. If I don't know whether a major political figure will be impeached, removed from office, or face criminal charges, if I don't know how that affects policy, regulation, or political stability, well, how do I make long-term investment decisions? Do I expand? Do I hold back? Do I hedge? Do I reallocate capital? Those questions don't have good answers when the uncertainty is this high. Now, let me tell you what I'm watching for, cuz that's the practical question, right? What actually matters here? I'm watching to see if these leaked bank records get verified and become part of the official record. Leaks are one thing. They get attention. They create headlines, but they're not the same as evidence that's been authenticated and entered into official proceedings. If these records become part of congressional hearings, if they're subpoenaed and verified and made part of the impeachment case, that changes things. That makes it real in a way that leaks alone don't. I'm watching to see how broad the support for impeachment is. Is this a partisan exercise with votes strictly along party lines? Or does it have bipartisan support that suggests the allegations are serious enough to cross political divides? That tells us something about the strength of the case and the likelihood of it actually leading anywhere. I'm watching to see how markets respond. Not just the stock market, though that matters, but also bond markets, currency markets, international investor sentiment. Are people getting nervous? Are they pulling back from American investments? Are they seeking safe havens? Those market signals tell us how serious investors think this situation is. And I'm watching to see how our institutions handle it. Does Congress conduct a serious investigation? Do they follow proper procedures? Does the process look fair and transparent? Or does it devolve into partisan theater that nobody trusts and everybody dismisses? Because the outcome matters, sure, but the process matters too. Maybe even more. Far. Institutions handle this well if they're transparent, if they're fair, if they follow the rules. That actually strengthens confidence in the system, even if the situation itself is messy. But if the process looks broken, if it looks purely political, if it looks like institutions are being weaponized rather than functioning properly, that erodes confidence. And that's when you get real problems in markets and in society more broadly. Now, here's something I want to emphasize because it's important. I'm not here to tell you whether Trump should be impeached. That's not my job. That's not my expertise. That's for Congress to determine based on evidence and constitutional standards. What I am here to tell you is this. Situations like this matter beyond just the immediate political drama. They matter because they test our institutions. They matter because they create uncertainty that affects economic decision-making. They matter because they reveal things about how our system works or doesn't. And those things have real consequences for markets, for businesses, for investors, for anyone trying to plan for the future in a stable, predictable environment. So what should you do with this information? Well, first, stay informed. Follow credible sources. Watch for verified information, not just leaked documents that may or may not be authentic. Second, be prepared for volatility. Not necessarily a crash, not necessarily disaster, but volatility, uncertainty that creates ups and downs in markets and makes planning harder. Third, maintain perspective. We've been through political crises before. We've been through impeachments before. The American system has shown remarkable resilience over time. That doesn't mean everything always works out perfectly. It doesn't. But it does mean our institutions have survived serious challenges in the past. And fourth, focus on fundamentals. In times of political uncertainty, the businesses and investments that have strong fundamentals, solid earnings, good management, clear competitive advantages, those tend to weather the storm better than others. Look, I've been doing this a long time. I've seen a lot of political crises. I've seen a lot of market turbulence. I've seen institutions tested and strained and what I've learned is this. The drama is often less important than it seems in the moment. But the institutional questions, the questions about whether our systems still work, whether accountability still functions, whether transparency still matters, those questions are always important. So yes, we have impeachment resolutions filed. Yes, we have reports of leaked bank records. Yes, we have uncertainty about where all of this leads. That's real. That matters. That's worth paying attention to, but it's also worth keeping in perspective. Worth watching calmly and thoughtfully rather than panicking or overreacting, because at the end of the day what matters most is whether our institutions can handle this, whether the process works, whether accountability is real. And we'll find that out in the coming weeks and months as this situation unfolds. So stay tuned, stay informed, and stay focused on what actually matters, not just what makes the most noise. That's the approach that served me well over the years, and I think it'll serve you well too. Let me turn plain with you here. The House committee has signaled that financial documents show previously undisclosed transactions relevant to its investigation. Now, in corporate terms, and this is how I think about these things because it's the framework I know best, this is like the audit committee kicking off an investigation after discovering unusual wiring and off-balance sheet flows. You know what that means? It means somebody found something that doesn't look right, something that wasn't disclosed properly, something that raises questions. And when an audit committee finds that, they don't just shrug and move on. They investigate. They dig deeper. They want to understand what happened, why it happened, and whether there are other problems lurking underneath. That shifts the matter from rhetoric to evidentiary inquiry. Not just people arguing anymore. It's not just political accusations flying back and forth. It's about documents, evidence, transactions that can be traced and verified. And when that investigation involves a former president, well, now you've got a mixture of governance risk and political risk colliding. Governance risk is about whether proper procedures were followed, whether disclosure requirements were met, whether the rules were obeyed. Political risk is about how all of this affects power, elections, public confidence, institutional stability. When those two things collide, you get complexity, you get volatility, you get a situation that's very hard to predict or model. Now let's anchor ourselves with the confirmed figures, because in times like this, it's really important to know what's actually verified versus what's just being talked about. HRS 353 sets out 7 articles of impeachment, 7 specific charges. It was introduced on April 28, 2025. That's a matter of public record. HRS 415 followed on May 15, 2025. Another resolution, another formal document in the congressional record. These aren't rumors. These are actual legislative actions that you can look up and read. But here's what we don't yet have: a publicly vetted breakdown of the leaked transactions in question. Many of the numbers being floated verbally, the amounts, the accounts, the specific transactions, they remain unconfirmed. We're hearing about them. People are talking about them. They're being discussed in news reports and on social media, but until we see official documentation, until these records are authenticated and made part of the public record, we ought to treat them as allegation, not facts. Allegations, that's an important distinction, because allegations can turn out to be true or partially true or completely false. We don't know yet. But the fact that such resolution texts exist and are being discussed amid leaked records, that combination places us in a new category of risk, compound risk. And that's what I really want you to understand, because this is where things get serious from an investor's and an institution's perspective. Compound risk is when you've got multiple risks that feed into each other. They're not isolated. They're interconnected. One makes the other worse. It's like having a house with a weak foundation and a leaky roof and termites in the walls. Problem is bad on its own, but together they compound. They interact. The water from the leaky roof makes the foundation problem worse. The weak foundation makes structural damage from termites more dangerous. That's compound risk, and that's what we're looking at here. So, let me walk you through the risk architecture as I see it, because understanding the structure of the risk helps you think about it more clearly. First, there's the financial element. Leaked banking records, multiple jurisdictions, intermediary entities. What does that mean practically? It means we're potentially looking at complex financial transactions that crossed borders, involved multiple banks or financial institutions, and may have used intermediate entities, shell companies, trusts, partnerships to move money around. That kind of structure isn't necessarily illegal. Lots of legitimate business involves international transactions and complex corporate structures. But it raises questions. Why was it structured this way? Were all the disclosures proper? Were all the tax obligations met? Were there conflicts of interest that weren't disclosed? Those questions matter, and they take time to answer. You need forensic accountants. You need legal experts who understand international finance. You need to trace money flows across jurisdictions. Second, there's the political element. Formal impeachment resolutions based on those records or related conduct. This is where the financial questions become political questions, where accounting issues become constitutional issues. If a former president engaged in financial conduct that violated laws or ethical Obligations, especially while in office or in relation to their official duties. Well, that's not just a business matter anymore. That's a matter of public accountability. Impeachment is the mechanism our Constitution provides for holding officials accountable for serious misconduct. It's a political process, yes, but it's grounded in legal and constitutional standards. So now we're not just asking, were these transactions proper? We're asking, do they constitute high crimes and misdemeanors? Do they meet the constitutional standard for impeachment? Those are much bigger questions, much more consequential questions. Third, and this is really important, there's the institutional element. Congressional committees, courts, and markets all reacting at once. Congressional committees are conducting investigations. They're subpoenaing documents. They're calling witnesses. They are building a case for or against impeachment. Courts may get involved if there are criminal allegations, if there are disputes about subpoenas, if there are questions about executive privilege or other legal protections. And markets? Well, markets are watching all of this and trying to figure out what it means. What does it mean for policy? What does it mean for political stability? What does it mean for regulation, for enforcement, for the broader business environment? All three of those institutions, Congress, courts, markets, they're all reacting simultaneously and they're all influencing each other. Market volatility affects political calculations, political developments affect legal strategies, legal rulings affect market confidence. It's all interconnected, all feeding back on itself. And that's why I call this compound risk, because you can't just look at one element in isolation. You can't just say, well, it's a financial matter, so we'll let the accountants sort it out. You can't just say, well, it's political, so it'll blow over after the next election. You can't just say, well, markets will adjust and everything will be fine. All of those things are happening at once. All of them matter. All of them create uncertainty that compounds and multiplies. Now, here's what this means practically for anyone trying to understand this situation or make decisions in this environment. It means timelines become very uncertain. How long will congressional investigations take? When will courts rule on key questions? How long will markets stay volatile? Nobody knows. These processes take as long as they take. And when you've got multiple processes running in parallel interacting with each other, the timelines become even harder to predict. It means outcomes become very uncertain. Will impeachment succeed? Will there be criminal charges? Will financial penalties be imposed? Will political careers be ended or strengthened? All of those are open questions. And because they're interconnected, answering one doesn't necessarily answer the others. It means risk management becomes critical. If you're a business, you need to think about how this uncertainty affects your operations, your planning, your capital allocation. If you're an investor, you need to think about how to protect yourself from volatility while still positioning for opportunity. And it means we need to be very careful about distinguishing between what we know and what we're guessing. We know there are impeachment resolutions filed. Fact. We know there are reports of leaked bank records. Fact. We know congressional committees are investigating financial transactions back, but we don't yet know the full details of those transactions. We don't know whether they were improper or illegal. We don't know whether the impeachment effort will gain enough support to proceed. We don't know how courts will rule on key legal questions. Those are unknown. And in situations of compound risk, the unknowns matter as much as the known. So here's my advice, and it's pretty straightforward. Stay grounded in facts. Don't get swept up in speculation about dollar amounts or specific transactions until you see verified documentation. Understand the interconnection. This isn't just a political story or just a financial story or just a legal story. It's all three, and they're feeding into each other. Prepare for extended uncertainty. This isn't going to resolve itself in a week or even a month. These processes take time, especially when they involve multiple institutions and multiple levels of investigation. Focus on what you can control. You can't control whether impeachment proceeds or how markets react in the short term. But you can control how you prepare for volatility, how you manage your own risks, how you stay informed through credible sources. Look, I've been through enough crises to know this. The most dangerous time is when you've got multiple risks compounding at once and you don't have clarity about how they'll resolve. That's where we are right now. Multiple elements, financial, political, institutional, all active at the same time, all influencing each other, all creating uncertainty. It's serious. It's complex. It's worth paying close attention to, but it's also manageable. If you approach it with clear eyes. If you stay grounded in facts, if you prepare for volatility without panicking, because at the end of the day our institutions have handled compound risks before. They've navigated complex situations where financial, political, and legal elements all collided. They don't always handle it perfectly, but they have mechanisms. They have processes. They have resilience built into the system. And that's what we need to trust right now. Not that everything will be easy or smooth, but that the system has the capacity to work through this step by step, institution by institution, until we get clarity. That's the only way forward. And it's a path worth following carefully. When those three converge, financial, political, and institutional, you get something other than noise. You get structural uncertainty. And markets hate structural uncertainty. They really do. Because you cannot price it easily. See, markets can handle all kinds of risk if they can price it. Interest rate risk. We've got models for that. Credit risk, we know how to evaluate that. Even political risk in a normal sense, policy changes, election outcomes. We can make reasonable estimates and price accordingly. But structural uncertainty, that's different. That's when you don't know if the fundamental rules still apply. When you don't know if the institutions you've relied on still function the way you thought they did. When you can't confidently predict how the system itself will respond. You can't build a spreadsheet for that. You can't run a model that gives you a clean answer. And when investors can't price something, they get nervous. They pull back. They demand higher returns for the uncertainty, or they just move their capital somewhere more predictable. Now the markets did respond, and this is worth paying attention to. There are rumors, and I want to be careful with this word rumors because we're still waiting for full verification, but there are reports that at the moment of public announcement of the impeachment inquiry, the Dow dropped nearly 2% in a single session. Now, while the exact minute-by-minute breakdown is still being verified, that level of reaction tells me one thing. Investors heard something they hadn't expected. A 2% move in the Dow in a single session. That's significant. That's not just normal daily volatility. That's not just traders making routine adjustments. That's a real reaction to real news. And here's what's important to understand about that reaction. It wasn't just about policy or personality. It wasn't traders saying, well, if Trump gets impeached, tax policy might change, or this affects our forecast for regulation. It was about whether the oversight framework still works, whether the system of checks and balances is real, whether accountability still functions at the highest levels, whether the institutions we rely on for stability and predictability can still do their job. When markets move a full percentage point or more on an institutional headline, not an earnings report, not an economic indicator, but a headline about constitutional processes and institutional accountability, well, you begin to ask a different kind of question. Is this pricing for one man or for the system behind him? Are investors worried about what happens to Donald Trump specifically? Or are they worried about what this reveals about the American system of governance, accountability, and institutional stability? That's a crucial distinction, because if it's just about one person, the market impact is limited and temporary. Political figures come and go. The system adapts. But if it's about the system itself, if investors are questioning whether American institutions can still handle serious accountability challenges, whether the rules are clear and enforced, whether the framework for governance is solid, well, that's a much bigger concern that affects long-term investment decisions, that affects capital allocation across entire sectors and markets. In this case, the missing piece so far is full public verification of the banking records leak and the exact amounts. And this is where we need to be very disciplined about separating what we know from what we've heard. Until we get official documentation, until these records are authenticated and entered into the public record, we treat the figures as speculation, not fact. Speculation. $342 million, 0.86 million, 0.17 offshore flows, a 6-year span. Those numbers are being thrown around. People are citing them. They're appearing in reports and discussions, but are they verified? Not yet, not fully. So we acknowledge them as part of the conversation, but we don't build our understanding on them. We wait for confirmation. What we do know is this: the resolutions are on the record, HS 353 and HS 4 and 15. Those are real. Those are documented. You can read them yourself. And the committee references very specifically the notion of previously undisclosed transactions and pertinent financial documents. Now that language is careful. It's deliberate. Congressional committees don't use phrases like that lightly, especially in impeachment resolutions. Previously undisclosed means transactions that weren't reported when they should have been, that weren't made public according to whatever disclosure requirements applied. Pertinent financial documents means documents relevant to the investigation. Documents that matter, documents that show something significant. That language right there, that's enough to raise flags. It's not proof of wrongdoing. Not yet. But it's a signal that serious questions are being asked, that evidence exists, and that the committee believes it's relevant and important. Now here's what I believe based on 6 decades of watching markets and institutions. When oversight is exercised, systems stabilize. Think about that for a moment. When there's real accountability, when oversight mechanisms are working, when rules are being enforced, that actually creates stability, not chaos. Stability. Why? Because people know the rules matter. They know their boundaries. They know that violations have consequences. That makes the system more predictable, more reliable, more trustworthy. But when oversight is feared, when people worry that accountability is breaking down, that rules aren't being enforced, that oversight is either too weak or too politicized to function properly, systems shift into price mode. What do I mean by that? I mean markets start pricing in higher risk premiums. Investors demand a more return for the uncertainty. Capital becomes more expensive. Planning horizons shorten. People make more defensive decisions. That's not good for economic growth. That's not good for business confidence. That's not good for long-term prosperity. And here's something else I've observed over the years in business and in broader society. The injections of leverage that occur when power is unchecked eventually unwind. Leverage is wonderful when things are going well. You can do more with less. You can amplify your returns. You can build bigger, faster, more ambitiously. But leverage cuts both ways. When things go wrong, it amplifies the losses. When problems emerge, they become bigger problems faster. And when you have leverage without accountability, when power operates without proper oversight, when rules aren't enforced, when disclosure isn't required, well, that leverage builds up. It accumulates, becomes excessive, and eventually it unwinds. In business, we call that a margin call. That's when the lender says, you've borrowed too much against assets that aren't worth what we thought. Put up more collateral or we're calling the loan. And if you can't meet that margin call, the position gets liquidated, sometimes in a very painful, very public way. In politics, we call it impeachment. That's the political system's version of a margin call. The mechanism for saying, you've accumulated too much power without proper accountability. Now we're checking the books. Now we're enforcing the rules. Now we're determining whether you still deserve the position you hold. And here's the crucial insight. The processes are connected. Leverage without accountability always costs more in the long run. Always. Whether we're talking about a business that's over-leveraged and under-supervised, or a political figure who's operated without sufficient oversight, the pattern is the same. In the short term, you might get away with it. You might accumulate power, wealth, influence. You might look successful, but the bill comes due eventually. The leverage unwinds. The margin call happens. The accountability mechanisms kick in. And when they do, the cost is higher than if you just maintain proper oversight and accountability all along. So what does this mean for where we are right now? It means we're potentially watching a margin call play out in political terms. The system is checking the books. Congress is exercising oversight. Financial records are being examined. Questions about accountability are being asked. That process is uncomfortable. It creates uncertainty. It moves markets. It raises questions about stability in institutions. But it's also necessary. It's how the system is supposed to work. It's the mechanism that prevents unchecked power from becoming too dangerous, too destabilizing, too costly. If oversight works, if the process is fair, if the facts come out, if accountability is real, then the system stabilizes, investors regain confidence, markets adjust to new realities, the uncertainty resolves. If oversight fails, if the process breaks down, if accountability is purely performative, if the system can't actually enforce its own rules, then the uncertainty persists. The structural questions remain. The risk premium stays elevated. That's why I'm watching this so carefully. Not because I care about the political drama for its own sake, but because it tells us something important about whether our institutions still work, whether oversight is real, whether accountability still functions, whether the system can handle serious challenges without breaking. Those questions matter for markets, for investors, for businesses trying to plan for the future, for anyone who relies on stability and predictability in American institutions. And the answers we get through this impeachment process, through congressional oversight, through the examination of financial records, those answers will shape confidence and decision-making for years to come. So yes, it's serious. Yes, it creates uncertainty. Yes, markets are responding, but it's also potentially healthy if the system is working the way it should. If oversight is real, if accountability still matters. That's what we need to find out, and that's what we'll learn in the coming weeks and months as this process unfolds. I'll be watching a few things closely in the coming weeks, and I recommend you watch them too because they'll tell us a lot about where this situation is headed and what it means for all of us. First, whether the full banking records evidence is released publicly. Right now, we've got leaks, we've got rumors, we've got numbers floating around that haven't been verified. That's not enough. We need to see the actual documentation, the real records, the evidence that either supports or contradicts what's being alleged. If those records become public, if they're released through official channels, authenticated, made part of the congressional record, then we can evaluate them on their merits. Or we can see what they actually show. If they stay hidden, if they remain just leaks and whispers, well, that's a different situation entirely. That leaves us with uncertainty and speculation rather than facts. Second, whether the committee invokes subpoenas or votes to proceed with articles. Talk is one thing, action is another. Filing resolutions is a statement of intent. But actually moving forward, issuing subpoenas to compel testimony and documents, voting to advance articles of impeachment, that's when things get real. If the committee takes those steps, it signals they believe they have enough to proceed, that the evidence is serious enough, credible enough to justify the constitutional process of impeachment. If they don't take those steps, if the resolutions just sit there without action, well, that tells us something too. Maybe the evidence isn't as strong as initial reports suggested. Maybe the political support isn't there. Maybe it's more about making a statement than actually pursuing accountability. Third, whether markets continue to price risk beyond the immediate headline. That initial 2% drop, if that's verified, that was a reaction to a shock response to unexpected information. But what happens next? Does that become the new baseline with markets staying cautious and volatile? Or do markets recover and move on, treating it as a one-time event rather than an ongoing concern? If risk premiums stay elevated, if volatility continues, if investors remain nervous, that tells us they see this as a deeper, more persistent problem. If markets stabilize and refocus on fundamentals, that tells us investors think this is containable, manageable, not a systemic threat. Fourth, and maybe most important, whether institutions defend transparency or retreat into silence. Do we get clear information from congressional committees about their process and their findings? Do courts handle related matters openly and fairly? Do government agencies provide the transparency needed for public confidence? Or do institutions go quiet? Do they hide behind procedural excuses? Do they become selective about what they reveal and when? That choice between transparency and silence will tell us everything we need to know about whether our institutions are healthy and functioning or whether they're compromised and defensive. Because here's the thing, if transparency wins, you'll see markets shrug and move on. Investors can handle bad news. They can handle scandals and investigations and even impeachments. What they can't handle is uncertainty and opacity. If the facts come out clearly, if the process is transparent, if everyone knows what's happening and why markets adjust, they price in the new information, they move forward. Might not be pretty. There might be some volatility, but it's manageable. But if institutions appear confused or selective, if information comes out in drips and drabs, if different agencies contradict each other, if the process seems arbitrary or politicized, well, you'll see risk premiums widen, and that impacts everything. Borrowing costs go up because lenders demand higher interest rates for the added uncertainty. Foreign capital flows slow down because international investors get nervous about American stability. Even everyday credit gets tighter because banks become more cautious about who they lend to and on what terms. Because if you can't trust that the rules apply equally, you reevaluate everything. That's not an exaggeration. That's how markets actually work. Investors need to believe that there are rules, that those rules are clear, and that they're enforced fairly and consistently. When that confidence breaks down, when it looks like rules apply differently to different people or that enforcement is selective and political, investors pull back. They demand higher returns for the added risk. They move capital to more stable environments, and that's costly for the economy, for businesses, for regular people trying to get loans or invest for retirement or plan for the future. So here's where we are. Let me sum it up plainly. A congressional impeachment resolution tied to leaked financial documents. That's the situation. Those are the facts we can verify right now. The numbers around those documents are still under investigation. We've heard figures. We've seen claims, but we don't have full verification yet. We're waiting for official documentation. The market reaction speaks not just to one man, but to how much the system still matters. That 2% drop, if verified, wasn't just about Donald Trump. It was about investor confidence in American institutions, in accountability, in the framework that makes long-term investment possible. Investors and citizens alike should watch not just who is accused, but how the system responds. The specifics of the accusations matter, sure, but the process matters just as much, maybe more. Does the system work? Can it handle serious allegations against powerful figures? Does accountability still function? Are institutions still trustworthy? Those are the questions that really matter in the long run. Because at the end of the day, the most valuable asset a country has is predictability, not perfection. Not the absence of problems. Predictability. The confidence that rules will be enforced, that institutions will function, that the system will work the way it's supposed to work. And predictability is not the absence of risk. Let me repeat that because it's important. Predictability is not the absence of risk. Every country faces risks. Every economy faces challenges. Every political system deals with crises and scandals and difficult moments. That's normal. That's unavoidable. Predictability is the ability to absorb risk and keep going. It's having systems strong enough to handle shocks without breaking. Institutions resilient enough to bend without collapsing. Processes clear enough that even in crisis people know what happens next. That's what investors are looking for. That's what businesses need to plan and grow. That's what citizens deserve for confidence in their government and their future. In my nearly century of watching markets and governments, and yes, I'm getting up there in years, I've seen a lot. I've seen crises, financial panics, market crashes, recessions, and depressions. I've seen bribery and corruption at the highest levels, fraud that destroyed companies and hurt millions of people. I've seen war. I've seen geopolitical upheaval. I've seen moments when it looked like the whole system might collapse. But I've also seen recovery. I've seen reform. I've seen resilience that surprised even the pessimist. Seen institutions that looked broken repair themselves. I've seen markets that seemed destroyed rebuild stronger than before. I've seen systems adapt and evolve and emerge from crisis with renewed legitimacy. And here's what I've learned from all of that. The best businesses, the best nations don't avoid risk. They can't. Risk is unavoidable. They manage it. They build structure so that when storms come, and storms always come, the system bends instead of breaking. They create redundancies. They maintain transparency. They enforce accountability. They keep the rules clear and apply them fairly. Not perfectly. Nobody does this perfectly, but well enough that when crisis hits, the system can absorb it. That is what I believe is at stake now. Not just one man's fate, not just whether Donald Trump gets impeached or avoids impeachment, but the framework, the system, the institutions that let us invest with confidence, exchange goods and services with trust, elect leaders with legitimacy, live our lives with reasonable expectations about the future. That framework is being tested right now by these impeachment resolutions, by these financial investigations, by the questions being raised about accountability and transparency and institutional function. And how we come through this test, how our institutions respond, how transparent the process is, how fairly the rules are applied, that will shape confidence for years to come. Not just political confidence, economic confidence, investment confidence, the fundamental trust that makes modern society possible. So yes, watch the specifics, watch whether Trump is impeached or not, watch what the financial records reveal, but also watch the system. Watch how institutions respond. Watch whether transparency wins or loses. Watch whether accountability is real or performative, because that's what really matters for all of us for the long term. And that's worth getting right. So keep your horizon long. Don't get caught up in the day-to-day drama. Don't let every headline shift your entire perspective. Think in years, not weeks. Think in terms of fundamentals, not noise. That's how you make good decisions. That's how you avoid panic. That's how you build wealth and understanding over time. Keep your cash ready. In uncertain times, liquidity matters. Having resources available, not tied up in positions you can't exit, not committed in ways you can't reverse. That gives you options. That gives you flexibility when everyone else is forced to act because they're over-leveraged or liquid. You can be thoughtful. You can wait for clarity. You can move when the opportunity is right, not when you're forced to. Respect the rules more than the rhetoric. Listen, the rhetoric is going to be loud. Both sides. Every angle, people will be shouting about constitutional crises or political witch hunts or the end of democracy. Most of that is noise. What matters are the actual rules, the constitutional processes, the legal standards, the institutional procedures. Those are what determine outcome. Not who yells loudest, not who has the most dramatic narrative. The rules. And if you respect those rules, if you understand them and trust that they'll be applied, you'll have a much clearer picture of what's actually happening than if you just listen to the rhetoric. And remember, when everyone's yelling, sometimes the most radical act is simply staying calm and observant. I've lived through enough crises to know this is true. Really true. When panic sets in, when everyone's running in the same direction, when the noise becomes deafening, that's precisely when you need to slow down. Take a breath. Watch carefully. Think clearly. Not because you're ignoring the problem, but because you understand that good decisions come from calm analysis, not from panic. The person who stays calm while everyone else is losing their heads. That person sees opportunities others miss. The person avoids mistakes others make. That person emerges from crisis in better shape than they entered it. Because clarity is the precursor to action. You can't act effectively if you don't understand what's actually happening. You can't make good decisions based on confusion and speculation. First you get clear. You separate fact from rumor. You understand the structure of the situation. You see the risks and opportunities accurately. Then you act decisively, confidently based on that clarity. But clarity comes first always. And in both markets and democracy, the best outcomes come from structure, not spectacle. Markets work when there are clear rules, transparent processes, reliable information, when structure strong. Democracy works when there are constitutional processes, institutional checks and balances, accountability mechanisms. When structure is maintained, the spectacle, the drama, the theatrical elements that capture headlines and dominate social media, that's mostly distraction. It might be entertaining, it might be emotionally satisfying, but it doesn't produce good outcome. Structure does, rules do, processes do, and the people who understand that, who focus on structure rather than getting swept up in spectacle, those are the people who navigate crisis successfully. Thank you for your time and attention to these important governance questions. I know this isn't easy stuff. I know it's complicated and uncertain and sometimes uncomfortable to think about, but it matters. It matters for your investments. It matters for your business. It matters for your country and your future. And the fact that you're here, that you're paying attention, that you're trying to understand rather than just react, that says something good about you. Keep doing that. Keep asking questions. Keep seeking clarity. Keep focusing on what's real rather than what's dramatic. And remember, in any system, silence is a choice and often the most expensive one. When institutions go silent, when transparency fails, when people stop asking questions or demanding accountability, that's when things get dangerous. That's when costs accumulate. That's when problems that could have been small become catastrophic. So don't be silent. Stay engaged, keep watching, keep thinking, keep demanding that systems work the way they're supposed to work. Not in a loud, theatrical way, but in a steady, persistent, thoughtful way, because that's how citizens in a democracy maintain the health of their institutions. That's how investors protect themselves and their capital. That's how we all ensure that the systems we rely on stay strong and trustworthy. Now, if you found this helpful, if it gave you some clarity, some framework for thinking about what's happening, I'd be grateful. If you'd like and subscribe, it helps me reach more people who are trying to make sense of complicated situations. People who value honest analysis over spin, people who want to understand structure and process rather than just consuming spectacle. And please leave your suggestions below. Tell me what questions you have, what you're wondering about, what areas you want to understand better. Because this conversation doesn't end here. Issues will keep developing. New information will emerge. The situation will evolve. And I'll be here watching carefully, thinking it through, trying to separate signal from noise and fact from speculation, just like I hope you'll be doing too. So stay calm, stay observant, keep your horizon long and your thinking clear. And remember, the truth works at its own pace, but it's always worth waiting for. Thanks for your time. See you in the next one.